Now, I would be buying more right now if I hadn't just bought so much more. But if you haven't, you know, topped up your positions, do it, right? When gold was at $2,000 an ounce, I said, this is the floor. So just buy it because there's very little risk because there's not much downside. Well, now that we're at 2,300, there may be a little bit more risk, but I don't think so. I think there's very little risk. That's my opinion in gold. I just see very limited downside in gold and silver, and therefore I see limited downside in these mining stocks, but I see massive upside in these stocks. Look at a long-term chart of these stocks. They are still dirt cheap. You can barely see this 30% rally. And if you buy it now, you're still buying these stocks a lot cheaper than people who bought them a year ago or 2 years ago. I know that's not going to be the case much longer, I don't think. I think we're going to see much bigger weeks than the week we had this week. So I think you just buy. So gold and silver, I know the guys at Shift Gold, they're going to work this weekend. The phones are ringing more. They're getting busier, but they're not nearly as busy as they should be. And the premiums, I bought some of these silver eagles and the premiums are still low. I expect the premiums to blow out on these coins because I think they're going to run out because all of a sudden there's going to be a rush. So those are two things when you're buying silver coins and gold. It's not just the price of the metal; it's the premium on the coins when there's a lot of demand and they haven't minted them.
In a recent analysis, Peter Schiff highlights the surging momentum in precious metals, particularly gold and silver. With gold prices reaching $2,300 an ounce and silver climbing towards $30, Schiff anticipates further upward movement. Despite minimal coverage in mainstream media, gold and silver mining stocks have shown significant gains, outpacing even the energy sector. Schiff emphasizes the undervalued nature of these stocks, urging investors to seize the opportunity before prices surge further. He points out that gold mining stocks remain relatively cheap, offering substantial potential for growth.
I bought some more silver for myself just like a week ago, 24 and change. Now it's 27 and change, headed to 30, headed to 50. I think we're moving up quick. I don't think it's going to be long before silver makes a new high. Now, gold's going to keep on making new highs. Now, the gold and silver mining stocks had big weeks, but nothing, I think, compared to what's coming. The GDX was up 7% on the week, and the GDXJ was up 8%. At one point, intraday today, it was up 9%, but it had a little bit of a pullback towards the end of the day. But I was watching on CNBC. They were talking about the markets. They barely mentioned gold. I mean, they're mentioning it a little bit now, and I'll get into that. But they talked about the energy sector. There was some host on, and he said, "Well, let's turn our attention to energy because that's the top performing sector on the week. It's up 4%." Now, I like energy. Energy is my second biggest position personally, next to precious metals mining. But they didn't even mention because energy is not the best performing sector unless you don't even consider the precious metals mining companies a sector. I guess they don't. They don't even care because precious metals mining stocks were up way more than oil stocks. And of course, oil went up. I mean, oil went above 87 today. Brent got above 91. These are 5-6 month highs. Oil prices are up 22% this year, right? And I'm going to talk more about that when I talk about inflation, but not that, oil wasn't significant, but really it pales in comparison to what happened in gold, and it got no coverage whatsoever. Now, these stocks are finally positive on the year, but if you compare gold mining stocks to the price of gold and silver, these things are going to move. Nobody is talking about them. Nobody is recommending them. That firm that downgraded Newmont Mining a month ago hasn't upgraded it yet. I remember I talked about it. I bought Newmont Mining the day they downgraded. I bought more the next day and the day after that. I hadn't even intended on buying more of the stock, but, I couldn't help it. I already had a lot of it, but when I saw that ridiculous downgrade and selling, I was buying a lot more stocks for myself. I bought more Barrick Gold when they downgraded Barrick. I mean, they downgraded all these stocks at the lows. I mean, Newmont is up like 30-something% since that downgrade, but they've yet to upgrade it. No brokerage firm has come out and said, buy a gold stock. This is still a stealth bull market. There's plenty of time to buy. Now, I would be buying more right now if I hadn't just bought so much more. But if you haven't, topped up your positions, do it, right? When gold was at $2,000 an ounce, I said, this is the floor. So just buy it because there's very little risk because there's not much downside. Well, now that we're at 2,300, there may be a little bit more risk, but I don't think so. I think there's very little risk. That's my opinion in gold. I just see very limited downside in gold and silver, and therefore I see limited downside in these mining stocks, but I see massive upside in these stocks. Look at a long-term chart of these stocks. They are still dirt cheap. You can barely see this 30% rally. And if you buy it now, you're still buying these stocks a lot cheaper than people who bought them a year ago or 2 years ago. I know that's not going to be the case much longer, I don't think. I think we're going to see much bigger weeks than the week we had this week. So I think you just buy. So gold and silver, I know the guys at Shift Gold, they're going to work this weekend. The phones are ringing more. They're getting busier, but they're not nearly as busy as they should be. And the premiums, I bought some of these silver eagles, and the premiums are still low. I expect the premiums to blow out on these coins because I think they're going to run out because all of a sudden there's going to be a rush. So those are two things when you're buying silver coins and gold. It's not just the price of the metal; it's the premium on the coins when there's a lot of demand and they haven't minted them. Just buy it. Stop waiting for a pullback. Right? You're going to be waiting for Godot. Right? Just get in there and buy. And even more particular with the mining stocks. You want to buy these gold mining stocks. You want to buy the Euro Pacific Gold Fund. You can buy it no load pretty much anywhere except the major wirehouses. You shouldn't even be working with those guys anyway. But contact the guys at Euro Pacific Asset Management. The numbers on the website. It's amazing that you can still buy these stocks this cheap. I don't think this sale is going to be going on much longer, especially given what happened today with gold and why. And you have to look at the whole day today with gold.
In his continued analysis, Peter Schiff delves into the latest jobs report, revealing a surprising increase of 303,000 jobs, surpassing expectations. However, Schiff points out that a significant portion of these jobs are part-time and government roles with no growth in manufacturing employment, a concerning trend for reducing the trade deficit. Despite the positive report, gold prices initially dipped before rebounding as real buyers stepped in. Schiff notes that gold is being repriced, with central banks increasing reserves amidst rising inflation and bond market turmoil. He dismisses concerns over potential Fed rate hikes, asserting that gold is poised to continue its upward trajectory.
And so it started with the jobs report, which we got today. We get the first Friday pretty much of every month. And so we get the jobs report for March. And the consensus was 200,000 jobs created. We came out with 303,000. 50% more than they expected, higher than the higher range, which was 230,000. They did revise the prior month lower, but only by 5,000. Not a big revision like we've been used to. They went from 275 to 270. So a big report, and the unemployment rate fell from 3.9 to 3.8, and the labor force participation went up from 62.5 to 62.7. So this is what Wall Street considers a very strong report. Now, I know it's another BS report. All these jobs net are part-time jobs. Look at the jobs. Almost 70% of them are government jobs. They are healthcare jobs, and a lot of healthcare jobs are really government jobs in disguise. And, food and beverage, hospitality, waiters, bartenders, hotel maids, that kind of stuff, right? That's where the jobs are. We had no creation of manufacturing jobs at all. And last month's loss of manufacturing jobs, which was originally reported at minus 4,000, was revised to minus 10,000. So the jobs that we need to reduce our trade deficit, those are disappearing. The jobs we're creating are going to widen our trade deficit. So these are not the productive jobs, but Wall Street looks at these jobs reports and they just look at it at face value. And the programs, the algorithms that trade all this, right? This is what they've been programmed to do. So as soon as this stronger than expected number came out, just like Pavlov's dog, right? These programs sold gold. So gold initially went down, but it didn't stay down because the real money, the real buyers came in and bought what the programs were selling. And then gold just spiked because this is a real move. The real gold buyers don't care about these jobs reports. They probably realize that they're BS. They don't care how many second and third jobs, broke Americans are forced to take because they can't pay their bills. They don't care about all this. They're buying gold. Bond prices got clobbered again today to end a horrific week for bonds, setting up a bloodbath. The yield on the 10-year now back up to 4.38, and on the 30-year, we're 4.53. So we're now closer to 5% than 4%. Pretty soon we'll be closer to 6% than 5%. Now, in the past several years, gold got killed when yields went up. Gold got killed on a strong jobs report. Not now. Gold went up. That's why I don't think there's much risk in the gold trade. Because believe me, if we had a weak jobs report, gold would have been up a lot more than $37. So in my opinion, it doesn't matter what the numbers are. Gold's going up no matter what. It's just that it'll go up even more on weak economic news than on strong economic news. But whatever the news is, gold is going up. Gold is being repriced. Central banks are increasing their gold reserves. They don't care. They don't care about the Fed at this point. They don't care how many rate cuts we're going to get this year. They don't even care if we get any rate cuts this year. None of it matters. Gold is going up no matter what. Now, the only thing that I think could cause the price of gold to go down is if the Fed hikes rates. And I think the probability of that is practically zero. It's not zero because obviously anything can happen. And the Fed should raise rates. But I don't think they will, especially with an election coming up this year. And the longer they wait to raise rates, the more damage it'll do to the Biden when they do hike rates or to the markets. I don't think they're going to hike rates. And so as long as the market knows that Powell's not going to hike rates, then just keep buying gold because inflation is going up. And if inflation is going up, that means real rates are going down. So if the Fed just stays where it is and inflation keeps picking up speed, which it's doing, and the Fed's going to do nothing about it, well, that's going to erode confidence in the dollar. That's going to erode the value of the dollar. Plus, we're on autopilot on the deficit spending. The sky's the limit. They keep passing new spending. Nobody cares about cutting government spending. Biden doesn't care. Trump doesn't care. And so the holders of dollars are getting out and they're getting into gold. And this trend is going to accelerate. That's why I'm saying there's very little downside risk as far as I'm concerned, yet there's massive upside potential. So this can't last. The prices can't stay this low much longer.
Today, we've unpacked some crucial insights from Peter Schiff's analysis. We've seen the remarkable surge in precious metals like gold and silver, alongside the overlooked potential of gold mining stocks. Despite a strong jobs report, Schiff emphasizes the underlying weaknesses in the economy and the ongoing depreciation of the dollar, reinforcing his bullish stance on gold. Remember, staying informed is key to navigating these volatile markets. If you found this analysis valuable, don't forget to subscribe for more content like this, and hit the like button if you enjoyed today's discussion.